Alright, here we go again, theTrendtradr.com. Let's take a look at major market developments. We haven't talked for quite a while. A couple of things happened and we have some trends going. It's looking really good here for the end of the year when it comes to our breakouts. First of all, we will cover the stuff where we were taking losses this week. This was actually a British pound Australian. We have the breakout marked here, just like in any other chart that we look at over all these weeks when we do long-term trend following. You always have these black lines where the fractal is, where my breakout gets hit, and I'm commenting on the trade as it goes on. Now this one was hit here, went down for a couple of weeks, not really any momentum getting going, as you can see down here, and now this week we are getting stopped out as our stop was placed just above the balance zone, and the market took us out here for a minor loss. Just as you know, I got that risk management video up. It will tell you how to manage your risk and how to just not care about something like this. It's a loss. You have to take your chance by entering the trade. If you don't enter the trade and risk that amount of money that you're okay with to lose, you have no chance for any gain. So you got to make sure you're in the market, but you got to also make sure to calculate that loss to stay in the market, because when you have no money left, at some point when you risk too much, you can't play, and that's bad. We want to play. Next one where we took a loss this week, US dollar yen. Check it out. You have a breakout down here. The market hits it at the end of last week, even closes below it, but so much bulls coming in, or so much support down here. Of course, we have central banks intervening. It's just great stuff going on. Breakouts fail, and now this market is closing inside the balance zone. We took this short and we got stopped out above these candle range here, as we saw the market coming up so much, and we had other pairs indicating, or other markets indicating, that the yen is getting crushed here. So we pulled the initial stop a little bit closer. The initial stop was just above the balance zone, and now we pulled it a little closer, and I think we did the right thing here as this market turned, and it's possible that these long breakouts will come into play again. As we see this moving up further here in the coming weeks, we do have a chance for a long position as we follow the market. Again, we do not have any opinion, we just follow it, and as this was short, we went short, we got stopped out, and we took it, or we'll take it long as soon as it goes long. Now another one that may not be looking all that great, even though it's still in profit right now, is gold. The weekly chart here, we are long from this breakout level here. Market went up quite a bit, but this is really the major breakout, the monthly breakout. It needs to be taken. The market needs to keep on trading above it. It needs to close above it significantly before we can really talk about a trend in gold. As you can see, after a crazy move like this, you do get your the backdrop weeks. We're staying long. We have a stop inside the balance zone down here. Small position is on, and we'll wait for this to unfold further. We do not really add on or want to get out too soon as this is correcting. We are kind of we are anticipating that this is coming down and wants to see the balance zone again. As I always like to say, the market wants to come back to that balance zone. That's where the price would be if there was no new incoming information. You would have this kind of level. Of course, the market would still be going up and down, but not in trends. You would have a continuous sidewards movement. And the market, as it's trending, and as you have these new incoming information that moves the market, at some point the steam is going to go out and the market will retrace before you have new steam coming in, meaning traders and investors who put on new positions, who exit positions, who add on, and so on and so forth. So after a crazy move like this, where you have a lot of buying going on and possibly a lot of people getting stopped out as the market continues up, you will have this backdrop, of course, and we don't know if we'll stay in that position if the market comes back so much that this whole side move that we have been seeing here in the past year will continue, or if it's just a minor setback before it heads out. We're staying long. We have a minimal risk going on as usual, and we'll see how it plays out. Taking a loss is no biggie here for us. Now, coming to markets that are looking really good and that we have been talking about for a while as well. Euro pairs. Euro being really strong here a couple of weeks into the trades, even a couple of months actually. We have been pointing out how the euro yen overall time frame is up, meaning the monthly chart is trading above the balance zone, it's trading above long-term moving averages, and we want to buy into this market as it keeps on breaking out. We have the first breakout down here, the second one, and the third one, and now we're closing well above the third one, and we're very likely to see this continue to the upside. A trend could be in the making in the euro yen. Of course, we don't know until the market has moved further out and our positions can get into profit. But a really good situation going on in this pair, in my opinion, if you are long. Now, another yen pair that's interesting here also, we haven't mentioned it, but Canadian yen hit that breakout here for the week, and we'll see how this goes. A look at the higher time frame also shows us we have been breaking out here before. That's where your breakout is, and now we are closing above it, and we have all the room up to the next fractal area, which is the resistance area, where you have all these sell orders lying at the 100-105 level. So quite a way to move there from the 91 where we're at right now. Also long, also calculated risk, also taking it slow, and just looking at what the market is doing. Euro Swiss franc, also pair that we looked at. Breakout happened here. We have been long, we're staying long. Very boring in the last 2 months, but we have a new fractal that will be taken probably next week. We'll see, who knows. Calculated risk on this add-on as this market is trending up. Overall time frame also breaking out, also broke out. The overall time frame break is really what you can see right here. That is your fractal that stands out compared to all the other fractals right next to it, which means it's a fractal on the monthly chart, as long as it covers 2 months to the left and 2 months to the right, and that would mean it looks like it does in the monthly chart, as we just said. Here's the fractal, and as you can see, all the bars to the left and all the bars to the right are lower, so that's your fractal breakout. You do not have a lower low in the correction going on from the high of this fractal to the low of that fractal. The low here is not lower than here, which means this is a valid breakout to the upside. And who knows where the euro is trading now. We are staying with the market. We're in early on. As soon as we get these levels hit on the higher time frames, and we don't question it, we just follow it. Also extremely important and very, very satisfying throughout 2017 has been or have been all of the indices. Look at the S&P. I mean, it's almost boring to keep on talking about it as this market keeps on going higher and higher and higher. We have a new stop right here, has been created 2 weeks ago. We have 3 breakout entries. All of them are in profit. The market keeps on going higher. We still need to recognize the declining momentum, and of course we have quite a bit of divergence. The high of the momentum is right here, which is this bar in the price chart, and now we have quite a few bars adding on to this. All of them are going higher while the momentum is really lagging, and it would take a lot for this to make a new momentum high, canceling out the divergence and therefore sending the market even higher. Right now we already seen the divergence high here, and now the market is just moving on and moving on and moving on, but it's running out of steam, and at some point you're going to get that drop back and your stop is going to be hit. We don't know when that happens. We don't know how much is left in here. What you can see though is we're closing above 2,500 in the S&P for the first time ever here tonight, just a couple of minutes ago actually. And we'll just hold this long. We have 3 breakouts going, and this is quite the nice profit. We have a profit of more than 15% compared to the entire account size. So that's quite good here for the year. That's not the only indice working well. The Nikkei really gave us some headaches at the close last week. 2 weeks ago, we had this convincing candle here that would fail at the blue line of the balance zone, and it closes also high inside the balance zone. Usually you have such a nice bounce, and this bounce would have followed through the next week, and you would be at the top of your correction and hopefully breaking out into the trend direction. Now the blue line of the balance zone has been the one that this market likes in this trend phase. Very deep down corrections, not nice to trade. Needs a lot of nerves to actually hold your position through a crap like this. I think euro yen, as we saw, no, we didn't see that yet. Did we see that yet? Yeah, we did see that yet. I'm sorry. Has a much clearer picture and is way better to trade for add-on positions compared to this one. Despite the bad candle closing of last week, this week saw immense bullish action off of these lows. Our stop is now below this candle, as this is a new fractal. No matter why the market is up so much, no matter why the S&P is up so much, we just trade the market, and we have a system, and the system has kept us in this trend as well, even though it is so crappy. We don't care if the central bank of Japan is the one that is responsible for a move like this. We don't care about anything. We just want to make money, and we do that by following the system. Uh, that means essentially that we are happy about candles like this. Hopefully we'll see follow through now and have these highs here at 20,000 be taken out and head towards the long projected 21,000. Now we have been projecting the 21,000 ever since we've been trading out of these levels down here after the successful breakouts, and also after the breakouts that occurred here. We still haven't made a lot of progress towards that number, and we'll see if this is the case now. What's important is we do have positions in here, and we do have positions from in here. Finally, our stop was able to move a little bit closer to the entry position. We are still not in the money, but we don't trade money stops. We trade market and we trade price stops, and we let the market tell us where a good place for stop would be. And of course, we use fractals to determine that. Hopefully we'll have a nice run towards the end of the year here in the Nikkei, and then we'll see where we get out sometimes, hopefully next year. At the end of next year, that would be the best, because it would mean we have a lot of trending going on in that Japanese market. Now, DAX, also very interesting, the German market of stocks. We had this trend, and as I said a couple of weeks ago, a stop out below this fractal. Now, the bar that you see right there hit this fractal here first, and then closes right above all of the lows of the previous candles. In Bill Williams terms, this is a divergent bar, and if you can spot them at the right place, which is not that easy, and if you constantly do it, and if you just constantly look for them, or you want to see them, you're not waiting for them to appear and then make you see them, but you actually want to see them, then they don't work. They are a bad signal, the typical pin bar signal. I'm not a fan of it. It fails a lot of the time. It's not a trend following signal really, and therefore we don't like it. But if we have a situation going on like here, with worldwide indices being really strong and just carrying each other to new highs and giving you such a textbook correction into the balance zone, and then failing to break out, closing as a pin bar, you just have to take, I just had to take that signal. And I have a stop now in at the break even level, had it down here before, and we have a very, very small position on, and we'll just let it ride and see where this goes. The DAX monthly is definitely hitting towards the 13,000 area, but who knows if momentum will pick up here. Who knows how strong this is going to be in the coming, well, years actually. This could be very interesting. If this continues, if the momentum can build up, we could have an ongoing bull market like nobody expects. They all call the crash. They all want to see this go down so much. We have people calling the top since last year, November. This is actually where the market broke out and did that trend that we're still long in. So who knows what's going to happen? We're just following and we accept losses in that process of following. That's why we calculate our risk so we don't ever lose too much. And when we see stuff working into our favor, we would add on to the position, even though that is very individual and tricky. But still, the favor is, or you have the odds in your favor. Um, when you gain something in this approach that I'm discussing here, you gain a lot. When you lose something, you lose little. You lose often and you don't gain so often. But the basic mathematics of the approach is typically trend following, and it means that you have periods with great gains that really take your account to the next level, but you will also see periods where not a lot of stuff is happening. Now, in the last couple of years, trend following didn't see that much attention. We have a lot of people bashing it because, well, the reason, in my opinion, is people are unable to hold positions for as long as we're holding them. And these weekly charts we're discussing here, very tough to follow and very tough to hold positions so long. People need the instant gratification, and it's very tough for them to not see anything happening in their account for so long. You just have open orders, active orders actually, and nothing is happening except for them ticking and ticking and ticking. But you don't really feel like you're getting anything done in the account. 1 year, 1 year and a half goes by, and that's just the time it takes for trends like this and continuation signals like this to unfold. And maybe we are entering a period now, as trend following hasn't performed that well in the last 3-4 years, even though here and there you did have quite some nice trends going, but just the overall market wasn't that thankful. We could maybe see, as the DAX monthly chart could suggest, that a new bull market establishes. Maybe as the indicator here, the momentum will pick up a lot and establish completely new highs above this move that previously went on. And the same could be true, of course, for any market relating to stock indexes worldwide. Now, a not so great picture we see in the FTSE. This one is actually dropping down. We have the monthly chart here. We are up. We're still above the balance zone, but we're approaching it here. And the weekly actually took a breakout. It definitely out of this trend here. We did a buy in here. We stayed long all through that and took a little bit of profit. I mean, it's just minimal because the trend didn't really going. Instead, the divergence played out. We are stopped out. And now this market looks to be like it's going to drop a little bit more until the momentum indicator is going to be below the zero line, which could happen in this previous fractal area, but it might also happen down here. We don't know. And then this market might have a chance to pick the bullish trend up again that we see on the monthly. As the market continues down on the weekly, we have support areas defined by these balance zone lines, and if you're unlucky, it will happen to you just like it did to us in the Nikkei, where the market is looking for the blue line. If you're lucky, it bounces off the green or the red line. Trend following here in the FTSE for now done. We don't want to get short as the market is overall still trending up. We are out of our long, and we would be waiting for new signals in this market. Now my voice is really giving out here at the end of the week. I'm sorry about that. Hopefully the video was useful to you. Check back. If so, like it, post a comment, and hopefully talk to you soon. Bye bye.